Hello, I'm Juliette Mann. Welcome to Global Business Europe. Our top stories. The UK's new Prime Minister announces tax cuts on his first full day in office. The questions remain over how he will fund them. Tariff trouble returns. US President Trump unleashes a 50% duty on Canada, and there could be more on the way. General Motors lifts its profit outlook as strong second quarter earnings and higher North American margins put the automaker on a stronger track. And navigating the turbulence ahead, Airbus China's CEO tells us what it will take to keep pace with surging demand. New UK Prime Minister Andy Burnham has pledged to remove VAT on household electricity bills. On his first day in the job, government bonds have reached a 2-month high, and sterling has dipped as investors weigh the prospect of higher government spending. Our correspondent Jen Copesake is in London for us. Hi there, Jen. So what else have we learned today?
So, yes, Andy Burnham has had the first meeting of his cabinet today. He's emphasised that this is going to be a cost of living government. Now, he said to those ministers assembled that people are finding life hard. He said ministers need to think carefully and right away about what they could do to make people's lives just a little bit better. And that's where we heard about this pledge to remove the VAT on electricity bills. Now, that was meant to be funded, he said, by scrapping a digital ID program that was introduced by Keir Starmer. Now, we've already heard from another minister from the former government that actually that hadn't been funded yet, so that potentially Andy Burnham needs to find that money from somewhere else in the upcoming budget. Now, how much money that will save the average household in actual fact is around $60 per year. So that's around $5 a month. So some people saying this is a small pledge, but he's saying it shows the immediacy and how seriously the government is taking the cost of living crisis. Now, what we also saw was this surprise announcement yesterday of the new Chancellor. That's John Healey, who, of course, was the former Defence Minister. Now, John Healey quit under Keir Starmer for saying that his plans that he wanted to have this defence plan was not going to be funded enough. He said there was an unwillingness of the former Finance Minister, Rachel Reeves, to fund his plans. So the news of his appointment as Chancellor has buoyed the defence industry here in the UK. We saw that as stocks were rising for various companies. So Babcock International was up over 7%. BAE Systems up 3% and Rolls-Royce up 2%. So we'll see what he is planning to do on defence spending. Now, John Healey did set out his priorities as Chancellor today during that cabinet meeting. He said that fiscal credibility is the bedrock of economic stability and also national security. He said that the new government had to be fiscally disciplined. He said that they were going to encourage growth in every postcode, as well as backing British wealth creation. So we'll see what the plans are there for the new government. It sounds like there's going to be more focus on the regions and change to come.
Jen Copesake in London, thank you very much. So what are Andy Burnham's biggest challenges? First is the economy. Boosting growth and putting more money in people's pockets will be a top priority after years of rising food, fuel and energy costs. A key part of that will be getting more people back into work. New data shows UK unemployment rose to 4.9% in the 3 months to May, and that was up 0.2 percentage points on a year earlier, underlying the challenge facing the new government. And here's how that plays out in the markets. This is a chart of pound sterling against a basket of currencies for the year to date. The new Prime Minister said on Monday he would stick to the previous government's fiscal rules, although he would use any flexibility within them. And that sent sterling slightly lower, but analysts say the markets are likely waiting for more details. Now, UK borrowing costs rose after Burnham's comments. The yield on the 10-year government bond rose to 5.04%. And remember, the higher the yield, the more the government needs to pay to borrow money. The UK is already grappling with high public debt and above-target inflation. We're joined now by international economist Vicky Price, who we love having on Global Business Europe. Good to see you. Look, the government is talking about a decade of renewable, but if there was one economic test which will define whether it succeeds or fails, what's that?
Well, growth, I'm afraid. in the next couple of years, because of course then we're going to have elections. So for Andy Burnham, I think that's the most important indicator he'll be looking at. And of course, how do you get that growth? You did already mention a few of the ways in which people might feel, better off, which is if the cost of living reduces or at least comes under some sort of control. And I think that's where they're focusing now to improve consumer confidence. The real question is whether businesses are going to feel more confident to produce that growth, which is so important.
He's pledged to spend more on infrastructure, on public services, and of course there's a lot of growing pressure to spend more on defence. Is there a credible way to do that within the fiscal rules? I suppose I'm wondering how flexible he's going to be.
But the fiscal rules do allow for borrowing for capital spending. So if you put a lot of the defence expenditure, which is due to take place, when assuming, of course, that is agreed between the Chancellor and the new Defence Secretary. Remember, of course, that the current Chancellor was the Defence Secretary until relatively recently. If there is an agreement on how, that money can be found, then it has to come out of capital spending, and that capital spending is allowed under the rules that exist now, because there are three rules really. First of all, that you only spend on current expenditure, in other words, the National Health Service, maybe support on welfare, from taxes that you raise, so you don't go out and borrow, but you can borrow for investment, infrastructure, for example, or HS2, which is that line which is meant to connect London with Birmingham, which is costing a huge amount. All that is allowed, but within all that, you also have to get your debt-to-GDP ratio to decline at the end of 5 years. It was originally 3 years now, certainly by the end of the Parliament. So you're constrained, but you can, in theory, borrow more if you want it.
The government's made such big promises, and yes, you're talking about that flexibility, but I'm wondering, because the markets are watching all of this closely, are investors convinced that the numbers add up?
Not yet. I mean, we have, as you suggested, seen this increase in 10-year yields, but they are happening everywhere because, of course, we have high oil prices. We have the war in Iran still, continuing, or resuming and then continuing, and things don't look like they're likely to be sorted out in a hurry. So those are still hanging over, those concerns hanging over the markets, and of course all that means higher inflation and higher interest rates. So against that type of background, it's very, very difficult to see what can be done by moving things around a little bit, or perhaps one of the areas that Andy Burnham, the new Prime Minister, wants to see happen, which is regions doing better without some serious expenditure. I'm afraid since COVID in particular, what we've seen is that the cost of levelling up, in other words, seeing that the various regions across the country do as well as perhaps London and the South East, which have been outstanding by comparison to the rest, that has become now considerably more expensive. So there's a limit to what can be done, and certainly what can be done over the next couple of years.
I mean, how much wiggle room really does this government have? I mean, can it really pursue this much more ambitious economic agenda, or are they really at the mercy of bond markets setting the pace?
Well, they can influence the bond markets, because if there is a little bit more confidence, particularly from businesses, and they start investing, then that's going to be good news. And what you've seen already is that indeed defence stocks have done quite well, and the FTSE's gone up, in fact, today. That's the main index of big companies in the UK, which does suggest that there is something there. But unfortunately, the economy has flatlined since the end of the first quarter. Nothing much is happening. Nobody's really hiring lots of additional people. So we've got unemployment sort of steadying as well. So you haven't really had any big movement in any direction. Everyone is very, very cautious right now, and that's the real issue. The markets are convinced that there is going to be growth, and that growth will be able to fund some of the expenditure which Andy Burnham will want to see happen to make people feel better off, perhaps, or cut some of the taxes for working people, which is also a possibility. What they're looking at is maybe raising the threshold from which you start paying tax, which has been frozen for ages. But that, of course, means less tax collection. The markets will be looking at that and trying to recalculate what it means for those fiscal rules that you referred to earlier. So they will be watching out very, very careful. We won't get a budget to explain it all until hopefully early October, but still that gives us couple of months of worry.
Vicky Price, thank you so much for that in-depth analysis. In the United States, General Motors has posted a 30% rise in profits in the second quarter, beating expectations. Mitch McGann is in New York. Hi there, Mitch. Good to see you. So let's start with that General Motors story. Not the first time they've raised 2026 guidance either. What are the markets missing here?
Yeah, hi, Julia. Look, one primary reason that General Motors is giving for this better-than-expected result is the strong demand for its products in North America, particularly pickup trucks, sport utility vehicles and luxury vehicles. It says the average transaction price for a General Motors vehicle is $52,000 US. Another reason the company says it's doing well is it's because it's lowering warranty costs, improving its bottom line. These are the costs automakers include in their budgets to fix a new car when it presents any issues. And they also say they're cutting losses in the electric vehicle market. So a couple or two or three reasons there were given for this strong result, which saw General Motors' second quarter revenue come in at $43.03 billion against an expected revenue of a little bit higher than that. Now, regarding whether or not General Motors can sustain this performance, the company certainly feels it can. It has raised its full-year guidance and expects earnings before interest and taxes to be in the range of $14 to $16 billion, up from an outlook of $13.5 billion to $15.5 billion. So really betting on a strong performance for the rest of the year. As a result, General Motors is up more than 4.3% on the stock market a couple of moments ago when I last checked.
Mitch, let's talk about tariffs, because here we go again. President Trump now imposing more tariffs on Canadian goods. What's going on?
Yeah, the White House has announced it's set to impose significant tariffs at a rate of about 50%, targeting Canadian goods and services. And they cover everything from dairy to construction materials, furniture, and even Canadian hockey sticks, ice hockey sticks. Now, the reason Washington says it's doing this is because it feels that Canada has been discriminating the US when it comes to trade. Now, it says other nations have been given greater access to dairy than the US. It also says Canadian provinces have been taking American alcohol off shelves, but not alcohol from other countries. And the law Mr. Trump is using here is from 1930, and it allows him to do this if he feels that the US is being discriminated against. Now, this could come into effect in 30 days. Mark Carney, the Prime Minister of Canada, said a short time ago that he's spoken to Donald Trump about this, and they agreed to intensify trade negotiations in the coming weeks. But it's not just Canada. The Financial Times is reporting that as of this Friday, the Trump administration could impose tariffs on dozens of countries. So it really feels like a bit of deja vu when it comes to tariffs here in the US.
Mitch McGann in New York, thank you very much. Well, from Wall Street to the London Stock Exchange, who's preparing for a 24-hour trading for the first time. It's a move aimed at keeping London at the centre of global finance. The initiative comes as the city battles to retain major companies and attract new listings. LSE 24 is expected to launch its first asset classes in the first half of 2027, pending regulatory approval. This is Global Business Europe. Still ahead. Airbus is ready for takeoff in China. CEO George Zhu tells us how the company plans to double its A320 production capacity in Tianjin.
Everything is a business story.
Welcome back to Global Business Europe with me, Juliet Mann. The headlines. The UK's new Prime Minister announces tax cuts on his first full day in office. The questions remain over how he will fund them. General Motors lifts its profit outlook with strong second quarter earnings and higher North American margins put the automaker on a stronger track. And tariff trouble returns. US President Trump unleashes a 50% duty on Canada, and there could be more on the way. Fasten your seatbelts. China is set to be a major engine of growth for global aviation, with Airbus forecasting the country will account for around a fifth of aircraft demand over the next 2 decades. The company is scaling up production in Tianjin and looking to China as a launch pad for new manufacturing technology. Li Zhonghua spoke to Airbus China CEO George Zhu about the opportunities and challenges ahead.
According to our global market forecast, it will continue to be the 20% of the future market for the next 20 years. So strategically important market for us. Second thing is that you're right, it's not only a market, it's really where Airbus has a major industrial footprint in China, for China, and where this demonstrate a lot of industrial resilience and competitiveness. So that is really a very important market for all of us. And also a very important industrial setup which can help Airbus to navigate through all the supply chain disruptions and try to catch up on the industrial ramp-up target, which is a very ambitious one, which we need to deliver 75 single-aisle aircraft per month around year 27. As of today, we have a mature line of line 1, which has based on the rate 6 at this moment, and we will double our capacity in the future with the line 2.
And are you planning to have probably the 3rd assembly line in the near future, because you have a big backlog?
This, as of today, China has around 20% of the global single-aisle market, and Airbus has overall 10 lines of the single-aisle. That means 2 lines in China means 20% of the market and 20% of the industrial capacity. We have the prediction which shows that even taking into consideration the high-speed train network competition, China will still have a very solid growth in the next 20 years in terms of fleet growth and fleet replacement. We are talking about 8,800 new aircraft need to be delivered to this single country market in the next 20 years. That's if you look at today's China, the fleet size is number 2 in the world. In the 2030s, China will be the number 1 fleet size as a single country in the world. And we have a strong belief that in the next 20 years, the flight per capita in China will be tripled at the end of the 20 years later.
And China has now entered a fleet recycle renew, we know. And how many of them are expected to be produced from the China factory?
If you look at the Tianjin final assembly line, as of today, half of the China market is served by the Tianjin final assembly line. But Tianjin final assembly line, interestingly, is also not only delivered to the Chinese customer. 25% of the aircraft is delivered to the non-Chinese customer. But in the future, with 2 lines in China, I think the line share of the Chinese Chinese airline demand will be fit or met by the Chinese deliver from Tianjin.
And speaking of the Tianjin assembly lines, when the first line was launched back in 2008, you personally were involved in that, in the introduction of Airbus to China, because you used to work for the Tianjin government and later you joined Airbus, so you know more about the Tianjin assembly lines than anyone else, I think. So based on your observation from over the past 20 years, what do you think has changed regarding China's manufacturing of airplanes?
If you ask me about what is the difference from now compared with 20 years ago, one thing is very obvious, that we are very much convinced and admire the speed of China in terms of innovation.
Speaking of that innovation in China, I know Airbus is now partnering with UB Tech. You want to use some humanoid robots on the assembly line. What more can you tell us about that? Are we going to use some robots now to make up for the labor shortfall?
We are working very actively to involve new automation, including robot and digitalization into our design, our manufacturing operation phase, and even into our future support and service maintenance area, after sales services and maintenance area. This is really something we think will be the major transformation of the aviation sector in the future. I hope that we can make it a good business case, operation success, then we can duplicate it in the European final assembly lines.
Do you think that will help solve the biggest challenge you are facing right now, that is backlog?
I think automation definitely will improve the quality of the products and also improve the operation efficiency. That will help the future industrial ramp-up on both the supply side and on the OEM side as well.
So the biggest challenge for Airbus or Boeing, the airplane makers now globally, is not about demand, it's about supply. And global supply chain disruptions have severely impacted this industry, apparently. So how is this impacting your business, and what is your way out?
Yeah. Today, if you look at the delivery of Airbus last year, it's still lower than the peak, pre-COVID peak. So it's true that we have accumulated a huge number of backlog. It's a problem. Even some people say it's a nice problem to have, but it's really a challenging problem to have, where Airbus is working very closely with the whole supply chain. And also Airbus is really put a lot of investment internally, also try to support this industrial ramp-up. Tianjin Final Assembly Line 2 is a very important example that we put further investment in China to prepare for the industrial ramp-up.
And domestically, we see the emergence of COMAC. COMAC is that the initial stage? So you are talking about reaching the target of 75 planes a month, but COMAC is still not producing at large scale. Do you see COMAC as a competitor in China, or probably in the near future?
For sure. COMAC is a serious competitor in China market, and even in the future, possibly in the overseas market. And we have to treat them very seriously. Yeah. But on the other side, I think with the Airbus development in China, with the COMAC development in China, one good thing is that the China supply chain system will grow very fast. And that brings a new opportunity also for us.
In your analysis, when do you think COMAC could be a serious challenge to Airbus?
It's already a serious challenge.
It's already?
Yes, it's a serious challenge to Airbus. But
Airbus can produce over 70 a month for Airbus, but COMAC can produce about 50 a year.
I think that if you look at the current situation, I think it's not only about how many aircraft you produce, it's about the reliability of the aircraft, it's about the customer satisfaction about the aircraft, passenger satisfaction about the aircraft. I think the aircraft is at a good level, and it's a serious competition, and we treat it very seriously.
To see the full interview with Airbus China CEO George Xu, you can scan the QR code on your screen now, and it will take you there. From trade to tourism, ties between China and Ireland are expanding. Bilateral goods trade reached a record high of more than $21 billion over the past decade, and now new direct flights are opening up closer connections. Ken Brown reports from Dublin.
239 passengers board the maiden China Eastern Airline flight on Monday connecting Shanghai and Dublin. A 13-hour flight that will run 3 times a week.
3, 2,
Wang Zhiqing, chairman of China Eastern Airlines, is the center in this video, helping to cut the ribbon for the opening ceremony. China and Ireland are closer than ever thanks to direct routes between Dublin and Beijing and Dublin and Shanghai, run by Hainan Airlines and China Eastern, opening up greater business, academic and cultural exchanges.
It's very convenient. I like Ireland very much.
Cultural ties are strengthening. Chinese students are coming to Ireland in record numbers, and Irish people are learning Mandarin Chinese too, as we found out at Dublin Airport.
那你为什么会说中国话？
我在中国读书了，在北京2年读书，然后我现在在上海开了一个公司。
Aviation expert Chad Huang has been working for over 10 years to help make these direct flights happen.
Super convenient for business, tourism, all the commute activity between Ireland and China.
Ireland is one of the few European countries running a strong trade surplus with China and has received around $10 billion in direct investment from more than 40 Chinese companies, including heavy hitters like Temu, Shein, Huawei and ByteDance, the company behind TikTok. Now travel between the two is more comfortable than ever.
And you have a sheep to help you sleep.
Yeah. I think it's very cute.
It is. Have a safe flight.
Ken Brown, CGTN, Dublin.
The headlines. The UK's new Prime Minister, Andy Burnham, announces tax cuts on his first full day in office, but questions remain over how he will fund them. US automaker General Motors lifts its profit outlook as strong second quarter earnings and higher North American margins put the automaker on a stronger track. And here we go again, tariff trouble returns. US President Trump unleashes a 50% duty on Canada, and there could be more on the way. And that is it for Global Business Europe. Thanks for watching. There's more on all of our stories at europe.cgtn.com, and do follow CGTN Europe on Facebook and Instagram and TikTok. And you can go to CGTN Europe's channel on the Telegram app or scan the QR code on the screen to get stories and updates sent direct to your phone. Coming up next on CGTN Africa Live. We'll see you again tomorrow, same time, same place. From all the team here in London, goodbye.